a major crack has opened in the wall between traditional finance and high-performance decentralized protocols. Bitwise, one of the most influential crypto asset managers, has announced plans to launch a spot hyperliquid HYPE ETF, ticker symbol BHYP, marking the first serious move to bring a derivatives-native Layer 1 blockchain into the regulated investment mainstream. The new fund, disclosed through Bitwise's official channels, would offer investors regulated exposure to the Hyperliquid token without requiring direct custody or interaction with the blockchain. That's critical. For pension funds, endowments, and traditional asset allocators, the technical and compliance barriers of self-custody are often insurmountable. A regulated fund structure like this removes those hurdles, creating a potential on-ramp for capital that has so far stayed on the sidelines. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The BHYP fund would function as a spot ETF, meaning it's intended to track the real-time value of HYPE by holding the actual asset, not derivatives, a model that gained legitimacy through the success of spot Bitcoin and Ethereum ETFs. But Hyperliquid is not Bitcoin. It's a purpose-built Layer 1 blockchain optimized for perpetual futures trading, with sub-second trade finality and a growing footprint in on-chain derivatives volume. Its native token, HYPE, plays a central role in staking, governance, and fee distribution. This focus on high-speed derivatives infrastructure sets it apart from broader DeFi platforms and gives it a unique economic profile. The fact that Bitwise sees enough durability and demand in Hyperliquid's ecosystem to justify an ETF suggests a shift in how asset managers are evaluating altcoin fundamentals, not just market cap or hype, but real protocol usage and institutional credibility. For institutions, it offers a compliance-friendly path to gain exposure to a protocol that's already attracting support from major players like Coinbase and Circle, both of whom have backed Hyperliquid's stablecoin integration. Still, the market is watching for details that could make or break the fund's success. The fee structure, custodian arrangement, and official launch date remain unconfirmed. These aren't minor footnotes, they're central to whether BHYP can compete with other crypto ETFs in a crowded landscape. Regulatory scrutiny will also be intense. While the precedent set by Bitcoin ETFs has paved the way, altcoin ETFs face higher hurdles. Regulators will examine liquidity depth, price manipulation risks, and custody standards with a sharper lens, especially for a token like HYPE that operates within a high-leverage derivatives environment. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The real test will be demand. The success of a spot Bitcoin ETF was fueled by billions in inflows because Bitcoin had a decade of adoption and a massive liquid market. HYPE doesn't have that same history. A HYPE ETF may open the door, but whether investors walk through depends on transparency, timing, and trust. Traders familiar with the crypto markets may see the BHYP filing as a bullish signal, but the real story isn't price speculation. It's about infrastructure convergence. This filing suggests that asset managers now view Hyperliquid's on-chain derivatives volume as sustainable enough to underpin a regulated product. What comes next? The market will look for Bitwise to file formal documentation with regulators, disclose custodial partners, and clarify fee terms. Each of those steps will be a signal of seriousness and progress. The broader crypto ETF landscape in 2026 is evolving fast, but not every product will survive. A HYPE ETF could become a blueprint for bringing other specialized protocols into traditional finance if it can prove its resilience. For now, the door is open. The next move is Bitwise's